Welcome to the 2024 Economic Preparation in the Present channel. I'm your host, Tony. Thank you for joining me on this Sunday edition, June 15, 2025. Happy Father's Day to everyone out there in the lower 48 United States and around the world. We continue to track the Dow Jones today. We're going to be talking about that, what happened last week, as well as inflation, as well as gold continuing to rise. A surge. Could this be the breakout year that it goes above $4,000? We'll have to wait and see. In the meantime, please hit that like button and subscribe button so you can be notified of the latest financial interpretation videos as it becomes available. And I appreciate your support, ladies and gentlemen, as we continue to navigate this slowdown in the U.S. economy, the European economy, and the world economy that's going to be taking place in the summer and in this corresponding fall, as you can see. So the Dow Jones on Friday, according to CNBC.com and according to the stock market experts, falls more than 700 points on Friday, and as attacks between Israel and Iran escalate. So we can see that there's a couple of ways that the Dow Jones can fall, either by, automation, the stock triggers automation, by bad news, sometimes by bad news, or sometimes by conflict. And in this case, we have conflict, physical conflict, not virtual conflict, that's going on in the Middle East. So the Dow Jones falls more than 700 points. Could this be the start of a bear season leading into July, almost next month? So not only that, but the S&P 500 dropped 1.1% as it closed down, and the NASDAQ also down as well. So we have a triple down market on Friday here heading into this weekend. So the tech stocks lowered as well, Nvidia, some of the other chip stocks, but it wasn't all bad because oil and defense stocks were higher, and Lockheed Martin and some other stocks apparently went up. But this just goes to show you that there's no guarantee that the stock market will always go up 3%, 3 to 5% every year in a linear fashion. It's dynamic, and we know that it could be influenced by these outside forces and things of that nature. So the World Bank, in line with that, according to BBC.com, predicts worst decade for global growth since the 60s. So instead of just one country, like say Japan, having a lost 10 years, it's possible that the world global economy could have a lost 10 years where everybody's just kind of like in a protectionist mode, trying to make sure their country is okay or straight until things get back into a more favorable environment economically. So the World Bank, of course, they're the ones that make these loans to these countries and put them in debt, a lot of these countries in debt, as they, build infrastructure. They say that they predict the worst global growth since the 60s. And so now the bank predicts global growth of only 2.3% in 2025. And remember, I told you back in the last week that typically you want GDP to be above 3.5% growing a year in a quote unquote healthy economy. So it's not just here. Even though people are saying that, Donald Trump's tariffs are being felt, we understand that. Most people understand that that means higher prices on food, energy, utilities, etc. However, it's worldwide. We're facing housing crises worldwide in Europe and Asia. We have over 8 billion people in this world now, and so it's a different scenario. Where we have supply and demand. It's not just supply and demand. It's trying to, how are we going to feed? How are we going to clothe? How are we going to provide sustainable employment on all facets, in all areas, in all sectors of this economy, from construction to healthcare to government to trades to AI and automation? How do we balance all that with a growing population, with growing demands around the world? And so this is what the World Bank is looking at. And so now that's 0.4% lower than forecast in January. And for 2027, it's only 2.6%. So we're kind of stagnating here. Japan, Europe, of course, I just mentioned you guys, and the U.S. were among those downgraded in the bank's twice yearly report. So they put out this semi-annual report. And Japan, Europe, and U.S., as I mentioned, is when the economies are stagnating back to the worst growth since the 60s. And combine that, we could have an opportunity where, combine that with the inflation, we could have a thing where we're going back to the early 1980s. As you know, that was a place where we had stagflation, high unemployment. You couldn't buy a job in a lot of these places. And it was just a very timely, testy situation for the United States. So looking back, CNNBusiness.com, reflecting on the markets, it's a U.S. wholesale inflation heated up in May. As you know, wholesale inflation is heated up here. The prices of input goods for many of these places that need to get steel, things, hard, tangible goods and services, steel, aluminum, paper products, wood products, lumber, all these input costs have gone up, and CNN Business has reflected that in their report here. The latest producer price index, the PPI, a closely watched measurement of wholesale inflation, it showed that the prices paid to producers rose 0.1% in May, lifting the annual rate to 2.6%, according to the Bureau of Labor Statistics data released on Thursday. And so it's a higher than expected input cost rise. And this is only going to get worse as we get more conflicts in the Middle East and more conflicts overseas in Asia as the shipping lanes change. Companies begin to downsize. A lot of these airlines, too, you're going to see a lot more consolidation in these airlines this year and next year as people cut back on discretionary income, cut back on travel to international places. And things of that nature based on what's going on with the economy and what's going on with the political world. So we're going to be seeing that effect as well. But, time will tell if this inflation is transitory this year, quote unquote, or is it going to be steady. I believe it's going to be steady inflation throughout the rest of this year. And I think you understand that too as well, because gold prices continue to rise here, ladies and gentlemen. Listen, gold surged to a new 37-day high on Friday, confirming a bullish breakout, possibly targeting $3,500 an ounce and extending to $36.64 an ounce. And I told you that my prediction for gold by the end of this year is definitely going to top $4,000 this year by the end of this year. And silver's going to go along for the ride. Silver's going to top $40 by the end of this year, guaranteed. And that's not saying it's going to be much, but this just shows that people are looking for alternatives, whether it's crypto, gold, or silver, or some kind of hard, tangible asset, whether that's land, whether that's rental properties, or whether that's dividend income, to help make up for the shortfalls that they're going to be experiencing in terms of your job salary not increasing that much, and you're not getting as high as a return on the cost of living increases for retirees on Social Security and other forms of income. And so this is what we're going to be looking at. When you see gold make this move up, that means that there's a lot of uncertainty in this economy. That means that people are looking for ways to protect their money, that at least have a chance to insulate their money from what's going on in the regular markets and what's going on Main Street with all this unrest and things in nature of that case. In any event, continue to prepare, continue to have faith in God, continue to work out, continue to be strong mentally, physically, spiritually, because it's all going to come to a head. This is a marathon, not a sprint, as you know. It's not just when people talk about the collapse, and I hear a lot of these channels, they just think it's going overnight. It doesn't happen overnight. It erodes gradually until eventually there's nothing left, to hold on to. And so this is what we have to do. And I'll talk to you soon later on this week when we get into more earnings and jobs reports. As we get ready to close soon this fiscal year and get into the new budget here later on this summer for 2026. God bless. Let me know what you think in the comments about this economy. Do you think the Dow Jones is on the continuous slide, or this is just a bump in the road with the conflicts? Let me know in the comments. Talk to you soon. Take care.